Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this autumny Friday afternoon. Markets are going to open in around 5 minutes. I hope you all had a great and successful trading week. And as always, before we jump into it, let's get the usual disclaimer out of the way. First, everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, everything that I'm using, so all the tools that I'm using, the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I always recommend, if you're here for the first time and you haven't done so in the past, I recommend that you check out the Elliott Wave principle. It's the strategy that I'm following and that you mostly see in this live stream / video, and you can read the book online for free when you use the link in the description down below. You can use the same link also to get a physical copy if you then want to do so. That's it. With that, I would say we'll jump right into it. Today we have a slightly green start into the day, so we see we're at plus 130. Overall, we've been moving sideways with our portfolio for quite a couple of weeks. We were already up much more and then basically had a decline, mostly in the GameStop position. So a lot of our gains were from selling cash secured puts against GameStop. Eventually we got shares assigned and then more or less enjoyed the rundown. Yeah, I'm currently considering something. We're gonna talk about that or look at that later. Yeah, what else is there? So we actually can jump directly into the charts, I guess. We're gonna start with GameStop as usual, so nothing changed. We're still waiting for either a move up to, in quotes, prove me wrong and confirm that our correction actually ended here, or in quotes, prove me right and give us another move downwards into the area of $15, which obviously would hurt our portfolio temporarily because then right now we have a lot of shares. Yeah, however, I would just hold through that because, like, based on the pattern, it's the hardest thing in Elliott Wave Theory is to label the corrective patterns because there are so many variations of them. The impulsive patterns, so the overall impulse, is usually easy to label and to also then further forecast. However, each corrective wave within an impulse can have its challenges. So I don't want to get out of the position that I'm holding because it's not guaranteed that my forecast here is correct. So the signs, there's still both versions possible. Therefore, we're going to hold on to the shares because the long time labeling doesn't change. So even if we were to go to the $15 mark first, after that we should go further up. And if I'm in quotes wrong, then we would just go further up from here and shouldn't get any lower anymore than where we were roughly here on the $20 1950 mark. So yeah, so GameStop unchanged. Maybe we get some movement today. What's going to happen today for sure is that our 5 covered calls, so we sold 5 $30 covered calls against our 500 shares here. Last week we see that we basically are earning around $80 or $70 to $80 in premium, and we're trying to buy them back for $1 each, so they're closed out and we don't have to wait for the market to close in order to realize the full premium, which also gives us the chance that today already we can then sell a new covered call for next week. And with that covered call for next week, then obviously we realize a higher premium. Yeah, it's like a little bit tricky because the premiums are not that high. We will see that in 1 minute and 8 seconds. That obviously for the $30 strike price, the premiums are relatively low. That's why we are, like, for last week, for example, also looking only at like $70 to $80. On the other hand, we are holding the shares and getting $70 to $80 is not that bad. It's better than just holding the shares and getting nothing. So there is at least that. Now there's still some echo. Okay, fix that. Sorry if it bothered you guys. Yeah, so much about GameStop. We covered GameStop in more detail in previous episodes, but overall I think we'll have to just wait and see how certain things develop until we get a clearer picture on the chart. And then we can focus a little bit more on GameStop. Now, the other thing that we've been looking at is Barnes & Noble Educational, where we are still waiting. We basically have a pending order here at 845. And we have that pending order because we assume that this is a big A, B, C pattern. And for that wave C, we have our wave 1, 2, 3, 4, and our wave 5, in my opinion, hasn't finished yet and should actually take us down to, I'm going to zoom out a little bit, should take us down into the area of 8 to 845. That's why we have our entry at 845, because it doesn't make much difference if we enter here or here, but down here we would risk missing the entry. We can see that we have here the 61.8 retracement level. We have the 100% expansion level that's based on this wave ABC, which would mark the ideal target for a free wave corrective move. And we have the 61.8 target area, which would mark the theoretical minimum target for a fifth wave. That we don't always have to hit, but it's usually where we would go at least in a fifth wave. So assuming our labeling of some kind of 1, 2, 3, 4, and 5 is correct, we should see that move down here happening. If we cross above 974, then I'm wrong, and either that's gonna be our wave 4 and we get our wave 5 push down, or we just didn't reach the levels that I would expect based on the usual forecasting patterns or methods. Yeah, we'll have to wait and see. For that, we got out of our Neo position. Yeah, it's a little bit cluttered here, but we basically got out here-ish. Looks like we were right, and the forecast that this actually finishes our wave 3 might prove to be correct, in which case this would turn into our, let's actually add an expansion there. I know it gets cluttered and it's hard to keep track of everything, but if we lose the oversight, we can at any time just relabel the whole thing if needed. We would expect at least a 38.2% retracement. Now, usually for an ABC pattern, wave C would very often reach the 100% mark. But since we're expecting the 38.2 retracement here, we actually are in quotes still good because it's still within the 161.8 expansion level. That's also possible for the wave C. So again, I expect in Neo that we see a further correction. Obviously, it's also possible that I'm proven wrong. But again, that's what I would expect, so that we go below the 639 here and reach the 584, and then from there would get the next move up. It's possible that the correction itself turns out bigger, in which case, so we correct to the 50% or 61.8%. Those three would be the most usual suspects when we're correcting an impulsive pattern. However, again, 38.2 seems quite reasonable here, and we'll see if that's going to happen. Then we can consider if we have some free cash lying around if we want to get in there or not. So that's about GameStop, Barnes & Noble Education, and Neo. And with that, we can actually move on and take a look at Immersion. Maybe we are eventually, not much happening so far. We're basically waiting for a strong move up to prove that this ABC free wave corrective pattern is finished, or for a break to the bottom to point out that I'm wrong here. Since we're looking at the daily chart, it might maybe happen next week, or we keep moving sideways in that range a little bit longer. We'll have to wait and see. And yeah, what are we looking on next? So let's pick cost. Cost, similar thing. So we're waiting for either a break of the 50% retracement level, or for a strong or visible move up to point or provide us with the confirmation that our correction indeed finished at the 50% retracement level. Novavax, they were also in quotes exposed. Yeah, I mean, while we got the break to the top, we already covered that yesterday. I'm still not 100% sure if our wave 4 finished here, or if the orthodox end of our wave 4 should actually be here, and we indeed have a triangle pattern playing out till here. Either way, even with the naked eye, we can see a 1, 2, 3, 4, and now wave 5 impulse. Might be wave 4 not finished, but from the overall look of it, and from even looking at lower time frames, I think it's finished. So we should get another push up to at least 1532, maybe even 1672. Reset spacing. We can look at the hourly chart for that. So there we can see the following. If we add an, not expansion, but an extension. So we start our wave 1, 2 down here. Up, wave 1. Wave 1, 2. And we can now see that we basically hit the 461.8 extension level for this potential third wave. So wave 1, 2, 3, 4. And then that gives us the forecasting points. So here, if we take our third wave, which again starts potentially here, then we get with an expansion, wave 3, wave 4, we get the target areas for wave 5. Right now, it's still possible that this is only the beginning of an A, B, C corrective pattern. So it's still possible that we'll get a little bit lower down, in which case we also would have to adjust then the wave 4 point. But on first glance on the 8-hour and the hourly chart, it actually looks like we're good to go. Yeah, We did not turn around precisely at the 61.8 level here. That's the one thing that points towards an additional move down and that the correction is not finished yet. If we look here, this initial wave 1-2 move with 2 retraces precisely 38.2%, almost on the dot, yeah, so plus minus 1 cent. And based on the rule of alternation, we expect wave 4 to retrace 61.8%. Now, we did not do that precisely. We missed by 9 cents. So it's possible that this is the correction in some form, A, B, C. It's possible that this is somehow 1, 2, 3, 4, 5, A, B, C, and we will get then another 5-wave push down. I think, therefore, we can even see if it would be A, B, C, then the 100% forecasting level would pretty much precisely plus minus 2 cent overlap with the 61.8 retracement level. So yeah, I mean, it's not too far down. We're talking about like a 10% drop. We're at 14, so 10% is 145. So that actually, yeah, like 10% drop, a little bit less than 10%. So in my opinion, an entry right now wouldn't be the worst. I would not enter with everything. And again, you should do your own research and make your own decisions. But from the looks of it, there is the option that this already is our correction because we got close-ish to the 61.8% retracement level, which fulfills the rule of alternation. But there is also the chance that this here is only A, B, and we're still waiting for the other shoe to drop for wave C to take us down to this area again that we can see between 1321 and what did we have? The 1319. Plus minus a little bit, of course. So right now, I think an entry wouldn't be too bad, but one has to consider that option as well. So yeah, like one can either wait and say, okay, enter down here. Again, 1321, 1319, that would be the price point to enter in my opinion. But there is the chance that the correction actually is already completed here, and in which case this will be the next 1, 2, and we will, 2 maybe not finish, 2 might retrace a little further. So we can also look at this. If this would indeed, or is indeed wave 1, we see that we reached the 38.2 retracement level. So, but it's still possible this turns into A, B, C, that takes us down to 50 or 61.8. So yeah, so one could, as said, enter here and then basically consider that there might be a 10% drop before it goes further up, or I'm proven wrong and it goes further down, yeah. Or one could consider waiting, having the pending orders down here and hoping that it will play out as ABC to get a 10% better entry. But that brings the risk with it that one misses the, again, considering this 1, 2, 3, 4 or 4 unfinished pattern, wave 5 push for actually a decent profit. Yeah, last but not least, yeah, that's pretty much it in Novavax. So if we zoom out again on an 8-hour chart, then we can see, and zoom out a little bit more, we can see that my, let's get rid of this strange pattern, yeah, that my entry here during that movement here actually wasn't too bad. I didn't catch it down here where we were at a nice retracement level as well, but only then noticed that we reached that level and that the overall pattern fits and so on a little later, and so I got in roughly somewhere here-ish, and I only got one call option that expires in January. If 0.4 is here, we would expect the 5th wave to reach the 29 to roughly almost $60 mark over the next couple of months. So definitely not a bad risk-reward ratio for those trades. Stop loss right now could be at 866 if one wants to play it safe, depending on the pattern. If we just trade this move here, one could place the stop loss at 1171. Yeah, that's pretty much it about Novavax as well. Moving on, SMCI. Yeah, so we're waiting to see if indeed this here is finally the end of a potential ABC pattern. In one of the previous episodes, I don't recall from the top of my head which one exactly. However, we also should keep in mind that there are alternative patterns out there, because we would expect the retracement to 38.2, where this would potentially only be 1, 2, 3, 4, and then we get with 5, then we get ABC at least, and then we get another push down. But there is a chance that this is already the ABC correction. It reaches at least the 21.4% retracement level, which is another not as important or as common, but still common enough turnaround point for retracements. And if that's the case, then well, then from here we might see the next positive development. Yeah, we covered immersion, we covered cause, we covered pretty much a lot of other things already. NVIDIA, now we see we have another push up. Potentially we finished the correction here. We didn't reach the full 38.2 retracement, which brings up the question, are we indeed already correcting this entire 1, 2, 3, 4, 5 move? Or is this 5 move not finished yet, which I consider the unlikely scenario, and we are currently just retracing this? Either way, from the looks of it right now, we would expect stronger upwards movement. So there might be red days in between, but it looks like we're about to get 5 more waves up here. Yeah, we'll have to keep an eye on it, and then in a couple of days we will be able to have a clearer picture and provide a better forecast, or at least a stronger opinion on the whole matter. Now Wheeler, let's look there. Still in the retracing phase, so we touched the 38.2 here. We're on an 8-hour chart. If we zoom in a little bit, we can see that we also have 1, 2, 3, 4, 5. And now currently, apparently, we're forming the ABC, which might have finished here. So if we add an expansion, I don't think we have finished because we're still falling a little short. But if that is indeed wave A and wave B, we can see that our minimum target would be a little bit lower. Likely that this is for wave C, this likely is 1, 2, 3 in progress, 4 and 5. So I would probably, if I were to enter this, I would probably enter or aim to enter maybe a little bit here on the 38.2 retracement and 61.8 expansion levels. So in that area, 1392 to 1424, or in the area here for the 50% retracement level. Yeah, so that would be my expectation here for Wheeler. And after that, we should technically see further upwards movement. No idea how strong, that's a different question. But that's how it looks like right now. To make this basically wave 1, wave 2, and then that here would ideally become the next wave 1, 2 that will make up wave 3 and bring us further upward movement in the next couple of months ahead. So that's that. Now we can look at SPY. We're actually getting a further push up, which brings up the same issue that we have with NVIDIA. So the assumption is that we have 1, 2, 3, 4, and wave 5, and wave 5 already touched the 100% target area. So we would actually be expecting to correct this entire movement here right now. But from the looks of it, it looks like we might have A, B, C, and are already in the next 5 with impulse up. Sorry. And just like with NVIDIA, it looks like retracement, that we only retrace the 21.4% in this case. Yeah, worth keeping an eye on it. So there's still the possibility that this somehow turns into the corrective pattern that actually corrects the entire movement. But right now, on first glance, it looks like we still get some push up. Potentially, so while we reach the 100% target area for this fifth wave based on this 3-4 move, potentially I would say that probably we have here 1, 2, 3, 4, and we're just getting this fifth wave push again, which in this case, let's get some target areas for that. So if that would be 1, 2, 3, 4, then we can see the target areas for that push would actually be up here. Now, if let's actually have both on the chart. However, here we're gonna add the third target level with 5. No, for that I need to make it a wave C target level, yeah. So we see that here, and then, so that's based on that we need 3, 3, 4. Oh, I might have had a mistake here, not like, let's check with my labeling. Oh, we only were labeling 1, 2, 3, 4, and 5 for basically finishing the third wave. But it looks like if that's already the third wave finished here, so we didn't reach the full 238, that might actually be an option, yeah. Then the forecasting area suddenly looks like this. And then the forecasting area for that subwave here looks like this. And we can see that basically the 100% target and the minimum target for this push both are, what is that, like 4%, no, 3% more upside roughly here in SPY. Should then maybe play out as 1, 2, 3. So this might be a stronger move, maybe a good Monday, 4 and 5. Yeah, so to finish that movement, and then we would, however, correct the entire move up till here. So expect then a retracement in that area. Moving on, if we look at the NASDAQ, let's load the NASDAQ and so it's actually micro NASDAQ. Okay, there we don't get any candles. We need a different ticker for that. Remove, yeah, but then regular NASDAQ, we can see, yeah, there not 8-hour chart. We need something more zoomed out, I guess. Daily chart, no. That might actually be, so yeah, we lost in quotes our labeling here because the future sticker that I was looking at obviously in quotes expired, so, and I didn't look for a new future sticker, but that might actually be interesting. So we visually are looking here at 1, 2, 3, 4, and also wave 5. So there's again a little bit more upside here in my opinion. So can see that we get those target areas here. On the other hand, it's possible that this is either if we I think we might terminate in that area, 20,700 to 21,000. So that this will be 1, 2, 3, 4, 5. And that, however, would be quite substantial because that would bring up the possibility that we actually here, from here to then wherever this goes, are having a big 5-wave, 3-wave, and then followed by 5 waves down. And that second one would actually, or should then actually be, so that move down should then actually be a strong and fast move. We really should keep an eye on that, and basically as the chart develops, label it a little bit further. Since I don't have any exposure, I'm not going to bother to do that right now, but that's pretty much that, yeah. Yeah, like, so interesting for us right now is Barnes & Noble Education to see if we either break the 974 to the top, which means we could enter, but a little bit worse than we would have hoped for, or if we indeed will first get our push to 845 and actually have the entry we are asking for. GameStop, as said, will have to, in quotes, roll our option. Now we bought back our $30 calls for this week, which means we can sell the $30 calls for next week. Selling them, nope, not those $30 calls. Yeah, so sell for next week, October 11. We can sell 5 pieces. We don't get a lot of money for it, but it's better than nothing. So there we go. And with that, we have basically $15 times 5, so $75 for the week. Again, not a lot, but in comparison to the portfolio size, it's also not too bad. And we have another 5 $30 calls going now. From the current cash balance that we have, which is not too big, we obviously have something already planned to use to buy Barnes & Noble Educational. We also have to, or I also have to actually close out the currency balances. So real quick. So, and then we see we have that left. So we still have an order. Let's do the math. 20 times 845. So that's 169 minus 229. So we have around $60 spare cash right now, which is obviously not a lot, but we can use that to buy 2 extra shares here to slowly increase our position with the premium that we earn from writing the covered calls. It's basically a buy-write strategy in this case. Now, should have done it first, but now again, currency, close non-currency, step, and order filled. Yeah, there we go. So yeah, and that's then pretty much it for today so far. So interesting things will be obviously watching GameStop to see if we will indeed get a push further down. While that would satisfy me in one aspect because it would confirm the pattern that I'm seeing. On the other hand, obviously considering the exposure that we have right now, I would rather see it go up. Have the shares called away, still keep a few spare shares, and have cash freed up to actually trade other positions. Additionally, as said, Barnes & Nobles would be nice to be proven right and basically reach down to 8.45 or at most $8 per share and then see the turnaround. And then obviously Novavax should show ideally that this is the finished fourth wave, although again there is the option that we'll get another push down further first. So I think we covered that. Yeah, so on the 1 hour chart we covered the option that this might be only A, B, and wave C takes us down into the $13 area. And then if that's the case, from there we would get our push up for wave 5. So it's possible that here maybe we today see a red day that takes us down here, and then from there we go further up, which brings up the question in Novavax, could we actually buy options? Yes, we could. So for next Friday, if we would say target area, just out of curiosity, our target area, if we go down here, would be 15 to 16. So 15 would definitely be a decent bet. So if we say for next $15, then yeah, there are no great options right now. That might be better to wait and see if we actually hit that level. So if it happens, then basically buy the call option, because then we get, for example, the $15 call option cheaper and the profit would be better, so the ratio will get better. Yeah, but that's, as said, pretty much it. So we're waiting for some developments. We're also in grab waiting, but there it's going to take longer. There we're basically looking at a weekly chart and are expecting to have this develop into a third wave that should take us up here given time, but our call option here expires in 2026, so more than enough time. And yeah, there is nothing else to add. So if there are no questions in the chat, I'm actually going to call it a day because I still have some other tasks, as so often, on my to-do list. Thank you all for tuning in. As always, don't forget, please hit the thumbs up button. It helps me a lot. And don't forget, as always, also subscribe. And then I'll see you all together on Monday for another episode of Daily Market Mastery around 5 minutes before the markets open. And that's it. Thanks for stopping by. Have a great weekend. And till Monday.